Oh, sorry. Hey, hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 11th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about economic and geopolitical, then how that impacts the overall markets. I do about the same thing in these daily market commentaries, but layering on top of that some option strategies that we talk about that might be able to be implemented into your portfolio. Not necessarily following me off the cliff, but I'm talking about option strategies in the environment, the right rules to follow, days to expiration, all of those things that go into options and what makes them the right option strategy for the environment and your market assumption. So what we do with that is kind of talk about my trades. It's up to you to ultimately come up with what you guys believe is your market assumption and the way to implement those strategies that I talk about. All right, without further ado, let's talk about the economic data and geopolitical stuff, how that's overall impacting the markets. We've got across the pond, not really a whole lot going on. As a matter of fact, Great Britain had manufacturing production come in line with expectations at 0.2%, so not a whole lot to see there. Here in the United States, we got CPI, Consumer Price Index, coming in better than expected at 0.1%. And then we also got the crude oil inventories. We've been talking a lot about crude oil, OPEC kind of breaking up, if you will, where Saudi Arabia is trying to punish Russia by pumping out, 2 million barrels of oil extra, and then Russia not being compliant with, because Russia's not being compliant, I should say, with OPEC and cutting back on some of the production because they wanted the prices to go a little bit higher. And Russia was supposed to do some building or putting money into the Saudi Arabia economy with some infrastructure or something like that that just never really came about. And then Russia is also trying to punish the U.S. fracking operations by allowing these prices to drop, because we've talked about this forever, that anything really below 50, I think that now the break even, it used to be 50, I think it's now around 48, but let's just call it 50 for ease of explaining it all. Anything below 50 basically for crude oil makes the frackers, that's their break even on their margins. They will continue to frack, all right, but the reason why is they are not really able to shut those fracking operations down because it's too cost intensive to ramp those back up if prices go back above 50 or when they do. Keep in mind, oil is in the ground and it's not going anywhere. So this whole thing with the tiff going on with these major companies trying to pump out oil to put people out of business, ultimately, the oil's still there, and we know where to find it because it's in the ground. People will come back as soon as prices go higher. I just think it's silly. We see this crude oil inventory number coming in at 7.7 million barrel build, expected to be a 2 million barrel build, and they're going to throw more on the market. That just really does not bode well for the price of oil, nor does it really help any of those guys out, because we weren't using the oil before they cut back or ramped up production. So there's just going to be a ton of oil on the market, very cheap. Good for us as consumer. I went to the fill up my car yesterday, $2.50 a gallon, where it's been upwards of $3.50 a gallon at least. So a major cutback in what I'm spending at the pump. That money is going to be spent elsewhere. So that will help create velocity and money and help us with this whole overall coronavirus slowdown. Another thing that's being talked about, speaking of geopolitical stuff, is payroll tax reduction or just getting rid of payroll tax. I don't think that that's going to fly, despite the fact that you've heard me talk about I think that those tax cuts actually do better for the economy because it puts a little bit extra money in everybody's pocket every month. The Democrats are probably not going to want to go with that because that really could hurt Social Security and Medicare and they want to keep those programs in working order. So a payroll tax would be a major hit to those types of government projects. All right, so here we go with crude oil. It's off only about 77 cents, despite the fact that I think it should be down a little bit more with that massive build, and knowing that we are going to see a lot more inventory come onto the market. We've got gold coming off today by about $13 right now. We would expect to see some movement higher here in gold with equities being down. We've gotten some major whipsaw days going on with the overall equities. Yesterday was just a rip your face off rally after being, way down on the day. Basically, we started out pretty high, just slammed to the bottom, and then just lifted the roof. Again, it was like a crazy whipsaw day. We've got bonds just slightly off on the day, pretty much unchanged as we're speaking here. That was the 10-year. Bonds higher by about a half a point right now. And a lot of this, bonds can't go a lot higher because think about with the interest rates are so low right now that I don't really see us going negative there. Here we are with the VIX still in the 50 handle. Looks like we could break this pretty soon, but volatility being elevated at this point. There we go. We just broke below 50. Keep in mind, these numbers with the VIX is meaning that we're getting we expect to see 4 percentage point moves in equities per day. We're getting that. We're getting 4 percentage points down, 4 percentage points up, it feels like, on any given day. So those whipsaws are moving quite dramatically. It also says that, we could see a 50% move over the next year in equities as well. So that's a little bit far stretch, but that's what some people say. Really what we're talking about here is that we are on a daily basis going to be able to see 4+ percentage point moves on any given day. As we can see here with the Dow Jones Industrial Average down 3.5%, off by about 864 points. This is what I was talking about with that massive move. We can look at the total range of just the day trade here in the Dow Jones. It was, the low is 23,000, what is that, 690, 23,690. The high is 25,000. So we're talking about 1,430 point moves. Pretty crazy. So rip your face off to the downside after the open, slammed to low. We got tweezer bottoms there, which is something you keep an eye on. Whether or not, third time through is what they say. And the market's just kind of digesting all of this with the coronavirus and everything else. I've been watching a little bit more TV lately just to see what most of the other minds are doing. I don't want to get stuck here in my office and be too tunnel vision, really. Sorry about the rain in the background. It's picking up a little bit here. But a lot of people are saying, start nibbling at some of the, stronger names. Microsoft, which is what I have in my portfolio. Disney, which I don't really suggest, although I've already kind of made my bed and I'm living in it. And because that's travel and leisure. I'd stay away from travel and leisure. But the stocks that I think are going to do good, despite the fact that we might have quarantines across the board, is like Netflix, Microsoft. I think people will still shop at Target, or because those are going to be some of those big box, Target, Walmart, and online stuff like Amazon. I think will do well. If there is a lot of buying online and people aren't going to the store and they're doing like the Walmart pickup and stuff like that, you guys, they're going to be using credit cards. That's why I've got MasterCard. So those are names that I think you guys should be thinking about at this point. Not necessarily buying at these levels, but I think that selling puts in some of those names that you are thinking about adding to your portfolio. Now, keep in mind, you need to have that money in order to be able to buy those stocks if it goes down there. But find those levels where you're comfortable with buying different underlyings to add to your portfolio that might be able to weather some of this quarantine or slowdown in the markets or sorry, in the economy. Because now is a good time to take advantage of extremely high volatility. We're seeing that across the board. That means you can get a lot further away from where the underlying is. You know, we always talk about volatility is overstated or fear in the market is overstated. Well, it's holding on to that fear recently because the news isn't stopping with talking about this coronavirus. But at the end of the day, when you get this explosion in volatility, you really need to start thinking that you need to take advantage of it because that's when fear is at its greatest. So you're able to get further away. If you were to start going out there and selling those puts, like I mentioned, do it very small. I'm not saying you're doubling up on your position. We're talking about dollar cost averaging just a little bit at a time. But right now, if you were to sell those puts today, you're going to be looking at another 10% drop in those equities before you would see your puts start to get tested. So that is a massive move. You might even be able to get further than that, 15 percentage point moves away. And, you know, that would be, you know, there's value right now in a lot of these names that I've been talking about. You know, we were talking about 20 times earnings. You know, now we're talking about 10 to 15 times earnings with this correction. So that's considered a little bit more value. Maybe as you know, 15% or 15 times earnings is more of a coming out of that recession type of PE ratio, if you will. But that, you know, to me is probably where we're going to be looking at. I don't think that it's going to get like a whole lot worse, but you know, I could be wrong. You know, it's my view on that. NASDAQ off by about 200 points. Again, only I thought it was closer to 3 percentage points at this level, but 2.5 percentage points. Again, in line with what we were talking about with the VIX, down 3 percentage points in the E-mini. S&P's off by about 85 points. We are still holding on to the value area. As you can see, we tested that value area low yesterday, but are holding on to that right now. A lot of volatility expanding in some of these underlyings as well as we're moving forward here. And then we look at the E-mini S&Ps on the daily chart. You can see this is that rip your face off rally I was talking about off those lows. We got slammed in the morning after being pretty bullish, slammed and then just snapped back face off rally, as you can see there. Hopefully we'll get another one of those today as some of the institutional buying starts coming in, seeing some value here. But that big move yesterday was a little bit wild. I thought that would have created more of a bottom than what we're seeing right now. But we're going to have to keep our eyes on it moving forward. I haven't done anything in my portfolio. Like I said, we're at those levels where I had gotten in a little bit early. But at the end of the day, if we start making more moves further down, I'm going to be looking to do some more of that dollar cost averaging by selling some puts. If we get that snap rally, I might be looking to sell some calls in that kind of environment. So keep your eyes out for that. But at this point, I'm kind of sitting on my hands, keeping an eye on how this all shakes out. That's all I got for you, other than we got to take a look at the disclaimer that I can't really find right now. There it is. Please take a moment to pause and read over this disclaimer. We are an educational company. We are talking about how to build strategies and things of that nature, but it's ultimately up to you to do your homework and find those opportunities in the market. There is risk of losing a lot of money when you are trading in these markets, especially. Keep in mind, liquidity is king, and there could be factors where there is lack of liquidity. No representation is being made that there won't be any losses. There very well may be, especially right now. So make sure you keep that in mind and read this over. Please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, so if you can't take that, take it easy.